The November jobs report, it's the last one of the year. Lots of people are curious to see if it matches up with, well, what Fed Chair Jerome Powell's been saying, about the U.S. economy being strong. And of course, everybody wants a hint about interest rate cuts.
Yeah, felt like everyone was holding their breath a bit, especially after October's numbers. Those hurricanes and then the Boeing strike really threw things off. So yeah, a lot was riding on this report.
But it definitely came roaring back. 227,000 new jobs. That's huge. Economists were expecting a jump, don't get me wrong, but this blew past all the predictions. Was this the Goldilocks report everyone was hoping for? Good enough to calm everyone down, but not so good. It takes rate cuts off the table.
It's a tricky thing the Fed's trying to manage, that's for sure. This surge in job creation is obviously great news, but then you see the unemployment rate actually went up a little to 4.2%.
Wait, so more jobs but a higher unemployment rate? How does that even work?
It's because more people are entering the workforce, actively looking for jobs. So even with all those new jobs, the rate can still tick up. But here's the real story. Wages kept climbing. They're up 4% from last year, which means people are working and they're making more money.
Which theoretically should lead to more spending, right? It's good for businesses, could fuel more growth.
Exactly. But it also raises those concerns about inflation, right? Which the Fed's definitely going to be thinking about when they decide about interest rates. Before this report, it looked pretty good for a rate cut this month. And now, well, this might have just made it a sure thing.
All right, let's switch gears for a sec. Bitcoin. Remember how it shot up over $100,000? Looks like that party might be winding down a bit. It's dipped back to around $98,000.
Yeah, some investors are getting a little jittery, I think, especially with all the talk about possible regulation. Crypto is still kind of the Wild West, and governments are trying to figure out what to do with it.
There's a lot of uncertainty there. But it's interesting. Some of those big retail names are actually sounding pretty optimistic. Lululemon and Ulta Beauty, they both upped their profit forecasts. They're expecting to make even more money than they thought.
That tells you something about consumer confidence, at least in those areas. People are spending on yoga pants and makeup. Could be a good sign.
Makes you wonder, though, if the economy really is as strong as this jobs report makes it seem, why are all these retailers offering such crazy discounts, especially now with the holidays coming up? Is it really just inflation eating into their profits, or are people nervous about spending for some other reason?
That's a sharp observation. It really makes you think, are consumers feeling the pinch from inflation more than the data shows? Are they maybe worried about what's coming next? Or maybe it's just that retailers have too much stuff and they're slashing prices to get rid of it.
It's a puzzle, all right. We've got this strong jobs report, Bitcoin cooling down, and some retailers who are surprisingly upbeat. And yet, those huge discounts are hard to ignore.
Yeah, it all adds up to a pretty complicated picture of where the economy's at right now. Not exactly a simple story, that's for sure.
Definitely not.
Oh, yeah.
And I think it really highlights why we can't just rely on headlines and surface-level numbers. We have to dig a little deeper. Try to understand what all these economic indicators really mean and what they might be hiding.
Absolutely. That's where careful analysis and interpretation become so important.
And that brings us to the big question. If the economy is really humming along like this jobs report suggests, why are retailers practically begging people to buy stuff with these massive holiday discounts?
It's a fair question. Is it really just about inflation? Or is there something else going on, some kind of underlying worry that's making people hesitate to open their wallets? It could be a mix of different things at play.
This is definitely something worth digging into. Could give us a better idea of what's really going on in the economy, how people are feeling about it all.
For sure. The real answers might be hidden beneath the surface of all these seemingly positive signs. It's fascinating, isn't it, how consumers react to, well, everything. Gas prices, trade wars. It all seems to affect their confidence.
And you can't forget about social media. It's like a constant stream of information, good and bad. Everyone's an economist these days, trying to make sense of it all.
And that's why it's so important to remember, data is just one piece of the puzzle. It doesn't always reflect, the actual reality people are living in.
Even the experts don't always get it right. Remember all that talk about a soft landing?
Well, we're still waiting to see how that plays out. Predicting the economy, it's not exactly an exact science. There are always things that can pop up that nobody saw coming.
Yeah, like that pandemic a few years back. Talk about a curveball. Really shows you how important it is to be able to adapt, be ready for anything.
Absolutely. As we head into the new year, inflation is still the big question mark. The Fed's raising rates to try and get it under control, but it's a tough line to walk.
Raise them too fast, you risk a recession. Not an easy situation.
And then you've got all the stuff happening around the world, trade tensions, political instability, conflicts, all adds to the uncertainty.
Yeah, it's a lot to take in. We're living in a pretty wild time, that's for sure.
That's why it's more important than ever to stay informed and, try to keep a long-term perspective. Don't get too caught up in the day-to-day ups and downs.
Like riding a roller coaster in the dark. You know it's going to be crazy, but you have no idea what's coming next.
Perfect analogy. This economic landscape is always changing, and we're definitely not at the end of the ride yet.
So we've got this jobs report that looks really strong on the surface. Bitcoin's cooling down. Some retailers are actually pretty optimistic, and yet they're still offering those huge discounts. It's strange.
It all boils down to one big question. Is the economy really as healthy as it seems, or are there some, cracks under the surface?
Maybe this disconnect we're seeing between the good numbers and the way consumers are acting, maybe that's a sign that we need to look a little deeper.
Maybe the answers are in understanding the psychology of the consumer, their fears, their hopes, how they see the future playing out.
At the end of the day, it's people who drive the economy. It's their choices, their worries, their dreams that shape the bigger picture.
If we can understand that, those deeper feelings, it could give us insights that just looking at the numbers can't.
So it seems like we're in this weird spot. The economic data is telling us one thing, but the way people are actually behaving, it's like a different story altogether. How do we make sense of that?
That's the million-dollar question, right? On the one hand, we've got job growth, wages are going up, all those positive signs. But then you see retailers offering these massive discounts. And it makes you wonder, is the economy really as strong as it looks?
It's almost like there's this gap between what the numbers are saying and what's actually happening in people's lives.
I think the key here is to remember that the economy, it's not just this one big thing. It's a whole bunch of different things happening all at once, all these different factors that play a role. You've got consumer psychology, what's happening globally, even the weather can have an impact.
And then you've got technology, all these incredible advancements happening so fast. AI, automation, it's all going to change the job market, the economy as a whole, in ways we probably can't even imagine yet.
Yeah, it's a time of massive change and a lot of uncertainty. The old ways of thinking, the models we used to rely on, they might not work anymore.
So we need to be ready to adapt, right? Stay informed, keep learning, and constantly reevaluate what we think we know about how the economy works.
Exactly. And we need to think critically, question everything, and look beyond the headlines, beyond the data.
It's about connecting the dots, seeing the patterns, and figuring out what's really important, what's just noise. It's like this giant puzzle, and we're all trying to put the pieces together.
A constantly changing puzzle, I might add. And while there aren't any easy answers, I think that's what makes it so interesting, the trying to figure it all out.
It's a journey, that's for sure. And it takes curiosity, a willingness to learn, and the ability to change with the times.
And in the end, I think it's that spirit of always wanting to learn more, to really understand this complex economic world that's going to help us through all this uncertainty.
That's a really great point. We may not be able to predict the future, but if we stay informed, stay engaged, and stay open to different perspectives, I think we can navigate these economic waters, with a bit more confidence.
Absolutely. Knowledge is power, right? The more we understand about what's driving the economy, the better decisions we can make.
Couldn't have said it better myself. It's been a really fascinating conversation, and I hope everyone listening feels a little more empowered, to keep learning about these topics, keep asking questions, and maybe even come up with some answers of their own.